What's going on, everybody? It's November 16th, 2022, daily log episode number 53. And today we're going to cover S&P 500 futures contract and what happened in today's price action, what I annotated before the move unfolded. It was a pretty good day overall. I was able to capture somewhere around 20 points. And prior to that, I kind of annotated how we could expect some choppy ranges just due to the fact that we are stuck inside of a dealing range. And even prior to the open, it was just a very lackluster price action. And I was looking at the other future contracts, and they just seemed out of sort or out of sync. ICT has talked about this before, where if one future contract or the other one is like completely kind of uncorrelated, it can create some low probability times. So for like US 30, it's doing a lot different things than US 100 or US 500. So, but even leading up to the fact, it was pretty noticeable. Overall, I wanted to see 39.51 to be ran out, and then 39.60 was my overall drawn liquidity for my trade there. So let's dig down into the 5-minute. I want to point out the fact that I said you should be looking for a FEG inside of a premium in order to go short. Be careful, we're sitting inside of a dealing range, could go sideways. I would suspect we take sell side, but could get nasty. And then there was a 5-minute setup where price drove up into a premium for value gap. Buy stops already ran. So I'll go ahead and cover that. So if you dig down to like a 5-minute or lower, let me extend this out in time. Coming into the New York Open, price looked like this. So it's pointing out the fact that you should be looking for fair value gap inside of a premium on lower time frames in order to go short to take out the sell side liquidity resting beneath that low there, the previous day low. So coming into the New York session, you can see here price displaced lower underneath the low here on the 5-minute. If you look at the 4-minute, there was a shift underneath the low. 3-minute, 2-minute, and then the 1-minute. The reason I'm kind of pointing that out is because somebody asked me today why I took that trade because the 5-minute didn't technically have a bodily closure underneath the low there. But if you zoomed out to the 15-minute, 30-minute, 1 hour, price was already shifting beneath the low here. So if you go down to like a 30-minute, there was already a bodily closure underneath that low there prior to the open. Same with the 15-minute. So the 5-minute was just even a lower time frame structure shift. And going off the backbone, why I took this trade is because we ran out buy stops. And if you look, this is a pattern called the 3 Indian heads. ICT has talked about. I'm not sure why this is not the correct emote, but you have your first drive, second drive, and then the third drive, and you're taking out buy stops every single time, and then the market collapses. So there's no reason that price should rally higher prior to the New York session, and especially going off the 5-minute or lower time frame, you ran out internal range liquidity as well. So on the higher time frame, you ran out external range liquidity, and then on lower time frames, you were running out internal range liquidity. So that's a really good sign as well. So you have buy side liquidity resting here. Price runs out the buy stops, returns into a fair value gap resting there. And then price displaced lower. And that's when I was looking at the 5-minute. And I noticed this fair value gap resting here. And then I was looking at the dealing range, just like I spoke about in the Telegram, how you should be looking for a fair value gap inside of a premium. So you should always be looking at your dealing range. Anything above equilibrium is inside of a premium. Price dips into there. And then if you look at my entry, it was right on the 50%, so right at the discount low of that fair value gap. I was comfortable with the risk. So that's the reason being I didn't really want to demand too much perfection from these markets. And I believe my stop loss went just above the high there. And I was looking for the low there to be ran out and then ultimately the low here. So I was talking about how you should be taking partials along the way, just due to the fact that price was, again, just really not clearly one-sided. I was expecting some type of consolidation. So that's the reason why we take profits. Some people, they don't like doing that and they like taking out at, full 1 hour, 2 hour, 3 hour, which is perfectly fine. However you want to trade, is, what works best for you. But for me personally, if I'm going to try to at least tag a sell side liquidity pool that's around 30, 40 points, I'm already taking out a large portion before I even get there. But I just want to see if I can, short into that area, because at times I do believe I can, leave a runner on that's 25% of the position. I already captured 80% at, let's say, 20 points, and I leave a runner for, 30 points and possibly even 40. And that's the reason why I take partials and kind of manage my trades the way I do, because that's really how I like to trade. It makes me comfortable. As soon as I'm up, 15, 20 points, I take half the position off. My worries in the trade ease tenfold. So if you have troubles with that, I would recommend, taking partials. So if you play out the morning session here, it was just really, really choppy. So I took a partial underneath this low here. Reason being, so once price displaced underneath the low there, it's taking out sell side liquidity. So you could expect a retracement after that, which we did. And then I took a partial once more at the low underneath there, which was running out the sell side liquidity, resting underneath here. So overall, I think it was right around 20 points or so. Not too bad, considering the conditions that we've been in. I honestly think this might be one of the last good weeks of trading. Looking at next week, we have Thanksgiving, and then we run into December. December and January are probably going to be no trading months for me. It's usually how it goes. Just due to rules, due to holidays. We have Christmas, New Year's Eve, and then even January. The markets are still not really where they should be. Right around the last week of January, going into February is when things start to pick back up. So maybe I'll mention this now. I do plan on doing one-on-ones during December and January. I don't know the price. I don't know any of the information, but it's something I'm thinking of just because I've had so many messages for help. I'll take a small group of people and just do one-on-ones. It's going to be no like Discord group or stuff like that. It's just personally hopping on calls and, if you need any help, whatever questions you have, I'm there to, help you. But I think that will be a good time filler during December and January. So let me know your thoughts if you would, maybe participate in that. There'd be a small fee for it, of course, just for my own time. But I'll update next week with some further information on that. And I think that's it for today. Tomorrow I'll be up trading. I know there's news in the morning, so just be careful of that. And until tomorrow, good luck and good trading, everybody.